rally towards the end of the year. So I think for the Biden administration, foreign policy issues might be a second-tier factor in terms of importance rather than dealing with the domestic COVID-19 pandemic.
Since you oversee as well commodities, Ed, I want to leverage this opportunity to get your read on what we're seeing in the sort of red-hot iron ore market and also a faltering gold market in the last few trading sessions. Is that going to continue? I mean, how much more is there to go on these?
Yeah, I think the iron ore market is clearly reflecting the strength of what's happening in China's economy. It's been able to rebound from its earlier poor performance at the start of 2020 quite sharply. So it's really the main driver of economic growth this year. Now, the big issue, I think, going forward is whether or not that China's growth can be sustained provided the rest of the world doesn't slow down too considerably. If there is scope for that going forward, if the vaccines get deployed and there is a return to something approaching more normal levels of economic activity, then certainly demand for industrial materials and industrial metals like iron ore and the rest of the base metals complex as well has been doing quite strongly. It does look like there is more upside ahead. Conversely, if you take that view as well, that does mean that there's a relatively negative outlook for gold. If we don't have a need for haven demand, then the gold market outlook looks a little bit softer in our view. And we already had expectations that gold was going to soften in 2021 rather than carry on the rally that we've seen most of this year.
Ed, thank you for those insights. It's Ed Bell. He's the Senior Director of Market Economics at Emirates NBD. Let's get to Daimler now, because the company's push to cut costs and lift returns has gained traction as the maker of Mercedes-Benz luxury cars benefits from 6 consecutive months of double-digit sales growth in China. Demand in North America and Europe is also gradually recovering as dealerships and vehicle registration offices remain open. The chief executive, Ola Källenius, spoke to Bloomberg's Matt Miller.
For a business like ours, where we fund our future with our own cash flow, we have the simple rule, produce cash flow and grow positive cash flows year over year. So we are our own venture capitalist. The fact that the market seems to put such a high valuation on EV business, I look upon that as good news, as an inspiration in our journey over towards emission-free mobility and becoming an EV company eventually. That could perhaps unlock even more value in our stock.
I mean, the reason I ask is, even though your stock has done pretty well this year, especially if you look at it compared to competitors, there's so much money pouring into these EV startups, a lot of which haven't even put out a prototype vehicle, let alone rolling one off the production line. Why would an investor choose that kind of bet instead of, Daimler stock?
Well, I guess you have to ask them that. We have the financial strength to be an architect of this transformation, and we're investing billions and billions into electrification, into digitization, software architectures. So we really want to lead this transition from the front. If I think back to my days in business school, what I learned was that the value of any one company eventually is the net present value of the cash flows that you're able to produce. And we very much subscribe to that rule, and I believe we can navigate through this transformation successfully, produce positive margins, positive cash flows, and valuation will follow.
Let's talk a little bit then about those products. You're launching a new electric flagship EQS next year. There's an electric Maybach in the works. How many pure EV models is Mercedes going to be producing next year, by the end of 2021, let's say?
Well, today, Mercedes-Benz Cars has 5 vehicles already in the market, and we're adding another 4 next year. So next year is going to be a very busy year for us, so we're ramping up. Our whole philosophy is, as I said, we've made this mental switch. We're on the road towards CO2 neutral mobility. So eventually we will cover the whole fleet, of course.
Fascinating conversation there with the CEO of Daimler, Ola Källenius. The stock is up about 18% so far this year. Still more to come. This is Bloomberg. take a closer look at the region now with our equities reporter, Felipe Pacheco. Felipe, as traders get back to their desks in Dubai and Abu Dhabi after a long holiday, what can we expect then from trading in these markets?
Good morning, Yusuf. Yes, we're back to normal life here in the UAE after 3 working days of holiday last week in Dubai and Abu Dhabi. And I think it's very fair to say that we should expect a very positive open in both markets in about 17 minutes, Yusuf. If we take a look just at the performance of emerging markets last week, and Dubai tends to perform very closely to the MSCI EM index, this benchmark rose for the 5th consecutive week. It was a quite good performance, mostly on news about the advances of coronavirus vaccines. All of those were actually supporting risky assets in general, and they deliver a quite good week for EM stocks. I think it's worth keeping an eye today as Dubai gets back to trading at Emaar shares. They've always been the one cited as trading at very good valuation, and that could actually gauge on top of this return of the risk sentiment in the markets around here. Emaar Properties and Emaar Malls are good names for that. Then we have all of those news when it comes to the oil market, the OPEC Plus agreement, and the potential support that this could give to the price of the commodity. So this could be, of course, beneficial for those large caps trading in Abu Dhabi.
And then we're, 1 year now since Saudi Aramco's record-busting IPO. The Total will continue to enjoy a steady stream of listings. What's kind of in the pipeline for 2021?
That's right, Yusuf. It's been 1 year that Aramco started trading in Riyadh, and well, it's fair to say that this was still a quite active year for IPOs in Saudi Arabia, even though many analysts, many bankers, and many investors were afraid that the Aramco deal itself could drain a lot of liquidity in the local market because of its size, of course. What we saw was about $1.5 billion in proceeds that were raised within the Saudi exchange, and that's more than Germany during the same period, just as an interesting comparison there. Looking at the deals that we have lined up for next year, we hear that people are actually excited that there's basically a continuation of this trend for 2021. We have, for example, SABIC has already indicated that it could go ahead with an IPO of its multi-billion-dollar specialty chemicals unit. That could happen sometime next year. Then we have ACWA Power International, which has the PIF as its biggest shareholder, very, very important player within the local market there. An IPO of part of the company could happen as of the end of June, And then just as another example of a big deal that could come to the market, we have STC, and it's planning to actually list as much as 30% of its internet service units sometime next year as well, Yusuf.
And this latest news around a potential breakthrough, a potential end to the Gulf Rift, given the impact that the fallout had initially back in 2017, how much of a rebound could we see then?
That's right, Yusuf. I think it's correct to say that there could